Hi, and welcome to the next session of our venture and capital interviews. Today, I have the CIO of Apollo Capital, Henrik. Welcome, Henrik.
Hi, Steve. Good to be here.
Now, me and you have known each other for some time. What I'd love to do to start off is love to firstly give a bit of a background as to Apollo Capital, because look, the area that you're obviously in is in the area of crypto. As far as for when it comes to getting information for it, I'm an investor into the Apollo fund. So I pretty much read your updates so that I understand what's actually happening in the ecosystem, as well as being a subscriber to different newsletters. And I remember it was about 14 months last year where I was asking you a whole bunch of questions around sort of what was happening. And your thesis at that time has proven pretty accurate. So that's my starting point. Over to you to sort of provide a bit of an intro.
Sure. So Apollo Capital is an Australian-based crypto fund. We're based in Melbourne, and we've been running for around 2.5 years now. We were one of the first crypto funds out of Australia. And me and my co-founder, we both have a traditional finance background. We are both CFAs, and we spent a lot of time in traditional finance before we entered the crypto markets. I've been investing in the crypto markets myself for 7 years now. And I think it's the best thing ever. I love my job, and the crypto markets are just so exciting, and they're changing all the time. You mentioned DeFi. That's something we have been focusing on actually since we started Apollo. Yeah. And that is really playing out in a big way now. So that's really exciting to see.
So before we get into DeFi, I'll just start off in saying that, I said in my office, I've got a Bitcoin maximalist, and I know that most of the people listening to this, that may be sort of, Bitcoin and Ethereum are probably two of the ones they most know. For you as a fund manager, how do you firstly assess, I suppose, the more known sort of cryptocurrencies that are sort of available? And then also, how do you assess the sort of new ones that are up and coming?
Sure. So we have a few different segments in the crypto markets, and we try to build a diversified portfolio around these different segments. Now, we are big believers in Bitcoin as well, and that is definitely still a big part of our portfolio. And we are believers in Bitcoin, especially in this macro backdrop we are seeing now, and we can talk about that as well. But apart from Bitcoin, we also invest in smart contract platforms. So that's Ethereum and Ethereum competitors. Now, most of the activity in the DeFi space is happening on top of Ethereum. So recently we have seen more attention on Ethereum, I guess, than on other smart contract platforms. And then within this DeFi space, we have different segments as well where we diversify. So within DeFi, you have different sectors. That can be lending, derivatives, synthetic assets, decentralized exchanges.
Yeah.
So we have all these different segments within DeFi as well. But we have Bitcoin as a form of money, hard money we like to call it, that has limited supplies and are very scarce. Yeah. And then we have a little bit of different kind of assets built on smart contract platforms, and that's mainly, we believe, kind of the biggest use case right now is what we call DeFi.
Just quickly, just a question I have around Ethereum. The release of Ethereum 2.0, was that late last year or early this year?
No, that hasn't happened yet. They have a roadmap to implement this new version of Ethereum.
Okay.
So this is going to be a separate chain to the current Ethereum blockchain. And we expect the first version of Ethereum 2.0 to go live sometime in the coming months. So that could happen already now in Q3. We are strong believers that will happen before the end of the year.
Yeah.
But this is only the first version of the Ethereum 2.0, and that will enable you to stake this stake Ethereum in this new blockchain, because they're moving to something called proof of stake. Today, Bitcoin and Ethereum are based on proof of work. We have these miners that are energy intensive, and we are moving to proof of stake, where instead you have a validated model that you stake coins and you can participate in validating network in that way.
And what has been, like, let's say, I think it was about a month ago or 2 months ago, I can't remember what I was reading, but someone actually it might have even been you. I was on, it might have been LinkedIn or something, but effectively they were showing the volume of trades typically they were going through in the crypto space, mostly on sort of Bitcoin and Ethereum. And they were comparing that as to the bubble of sort of, like, let's call it November, December sort of 2017. And when I saw that, I was really surprised about the volumes of trades that have been done. What would you say about that volume that sort of most people wouldn't know or wouldn't be aware of?
So we have kind of the last few years, obviously we went through a bear market, but kind of the infrastructure has been built out, and the volume in the sort of crypto to crypto market is concentrated on mostly Asian exchanges like Binance, FTX. These kind of exchanges have attracted a lot of volume, and I guess this huge network effect in running an exchange, right? But not only kind of that crypto native volume has been growing. We are also seeing record volumes on CME, which is used by traditional managers to access the crypto market. So CME and ICE, they both have Bitcoin futures, and we have seen record volume there recently. And I think that's indicative of traditional investors coming into the market. And interestingly enough, a few months ago, we had Paul Tudor Jones, which is a
that was going to be my next question.
Yeah, right. And he said that he's putting a percentage of his assets into Bitcoin, and he's accessing that market by buying futures.
But I found his timing really interesting, because it was literally sort of as COVID started to take effect, Bitcoin had taken a bit of a hit at that stage. People were surprised that Bitcoin went down at sort of in sort of alignment with S&P. Going forward, what's your sort of outlook, and how are you now? Sorry, firstly, I'm going to ask you about Bitcoin. What's your thoughts on the sort of value of Bitcoin where it's now? And then also I'm seeing stuff talking about it's becoming the season for altcoins. So I'd love to have your commentary on that.
Right. Yeah, so we had a Bitcoin. So firstly, I think there were some consensus, at least in the crypto community, that the macro backdrop for Bitcoin looked really interesting this year, because all the inflation that is happening in the traditional world, the Fed was talking about QE unlimited.
Yes.
Basically. So they're printing record and that's for central banks everywhere in the world. They're printing money, right?
And to be honest, that was my sort of thesis as well. Like, I was chatting with one of my team, and I was like, I just don't like. It feels like it's the perfect setup for Bitcoin, given there is so much money being pumped into the ecosystem.
Yeah, exactly.
And also the low interest rates as well, which means there's highly likely there's going to be more stimulus provided. You're in Melbourne, you're going through your second lockdown. There's likely to be additional bailout monies coming. And it's like, how long till you start to see that impact?
Right. So, and then secondly, we had the Bitcoin halving event in sort of beginning mid-May of this year, which happens every 4 years. The supply of Bitcoin gets cut in half. So that was a strong sort of event for many people looking at the market. We always said that probably will play out to kind of the 6 to 12 months after the event, as that sort of feeds through the market.
Is that proven over history as well? Is that typically what the time frame is? Is
the
impact on price?
That is sort of, if you look back, I mean, we don't have that many events to go by, because it only happens every 4 years, and Bitcoin is only 11 years old. Sure. So we don't have that many times to kind of anchor something to. But I think that's generally the consensus that it's going to play out. But Bitcoin price hasn't done that well, right? So since the halving, Bitcoin was actually around these levels. So Bitcoin today is around $9,300 and it's basically where it was at that time of the halving. So Bitcoin hasn't done much since then. What I believe is that I think the 10,000 level is a huge level in Bitcoin. So if we go over the 10,000 mark for Bitcoin, I think we will see another rally in Bitcoin. And if we can stay there for a little bit, then I think we'll get new confidence in the Bitcoin market, and we can go much higher. And once we're off to the races in Bitcoin, in the next bull market, we will take out the last all-time high, which was 20,000, I believe.
And if Bitcoin takes off, Ethereum typically goes with it. And and we'll talk about DeFi in a second. Given the sort of I suppose volume and momentum that DeFi have, do you think Ethereum will go beyond, as far as increase at a higher rate than Bitcoin?
Yeah, especially if they can execute on Ethereum 2.0. That will be key, because Ethereum itself is under a lot of load right now and is getting very expensive to use Ethereum. And that's because of, thanks to all the activity we are seeing in DeFi, because all these protocols are building on top of Ethereum. They have this network effect, which makes Ethereum stronger. It's hard for anyone to build something outside Ethereum, because all these protocols are feeding into each other. There's the composability in DeFi. So Ethereum has a strong stance, but they need to innovate and solve the scaling problem, which they are struggling with now. Right now, I just paid $10-15 for a transaction I did, and for many small investors, that makes it really hard to use. So they really need to figure that out. They have a strong plan in place, but it's going to take some time before Ethereum 2.0 is up and running. Even though they can launch the start of it this year, it will be quite a while before they have a fully functioning network.
Yep. Okay, now let's get on to DeFi, because I said you're the one that sort of put me on. Just firstly, give it an explanation for those that sort of wouldn't understand. And then I'd love you to go through a breakdown of the different areas that you're sort of looking at.
Yeah, so I think the reason why we identified DeFi as the biggest use case for crypto and blockchains overall is that financial contracts are very well defined, so they're very suitable for smart contracts, which are these automated transactions that are taking place on Ethereum and other network. So it's sort of the best fit from a use case standpoint. And that is playing out really well now. And the other thing that makes this sector attractive for many investors is that many of these assets have a type of cash flow. So you have some kind of yield or buyback, something like that. They generate some kind of cash flow, which is super attractive because you can stake these assets, you can earn an income, and it actually has an intrinsic value, which is different from many other assets. So
for those that don't know, explain how that would work. If I'm an investor and I'm investing into, name it Maker or whoever it may be, how am I generating revenue from my holdings?
So many of these things can be a bit hard to explain, and you really need to experience it yourself and go on these networks and try it out. And that's the best way, I think, to really understand it. But Maker is this platform where you can take out a loan in a stablecoin called DAI. And to do that, you need to pay an interest rate, and you pay the interest rate to the holder of the token that is backing the system called MKR. So if you're a holder of MKR, which we are at Apollo and have been for a long time, then you basically receive that interest in one way or another. In Maker's case, they have a buyback and burn model. So that's a form of, that's what companies do, right, on the stock exchange. On other networks, it can work a little bit different, but the basics are the same. There is a really interesting network called Synthetics. They're actually originated from Australia, from Sydney. They did an ICO back in the day called Haven, and now they pivoted a little bit and launched this platform for synthetic assets, which is super interesting. You can trade FX, commodities, equities, and crypto assets on top of Synthetics. And they also have their own token called SNX. The SNX token has done fantastic this year. We've been big supporters of Synthetics and SNX for a long time. They're active in staking in the network. And how the cash flow works there is that the SNX token is backing the whole system. And if you're an SNX staker, you receive all the fees they collect on the platform as people trade these synthetic assets.
And as a portion of their holdings, what percentage is that typically? And how does it vary during a course of a year?
I didn't really get that question.
So if let's say they've got 10,000 of holdings, right? What sort of percentage of revenue or what sort of percentage of income?
All the AUM you mean is...
yeah, correct.
So the AUM on many of these platforms is in the hundreds of millions now. So that's kind of the asset base that is generating a yield, if you like.
Yeah.
The other big...
I was going to say, what sort of yield do they typically generate, and how does it fluctuate across a sort of 12-month period?
Sure. I mean, it changes a lot all the time, right? But what happened recently in mid-June was that one of the biggest lending platforms in DeFi, called Compound, they released their own token called Comp.
Yeah.
And by participating in the network, you not just earn the yield from the Compound network, you earn the Compound token as well. So they distribute that token to users of the platform. Yeah, trying to decentralize themselves, you can say. They were originally equity backed, but now they're changing to a token model, and they're giving out this token to these users. And many other DeFi protocols are following the same concept. The Comp token is what is called a governance token.
Yeah.
And the yields, and so they did that in mid-June, and this created an explosion in what is called yield farming. Sometimes people looking for these kind of yields in crypto, and the yields have been, ranging from 30 to 100% annualized.
Yeah, wow.
So that has created a huge upswing in many of these assets. Compound, kind of the AUM in Compound doubled overnight almost, and it's now something like $600 million. So that really sparked a big interest when they did that, and that was...
I bet it did.
That was just last month. It feels like it was ages ago.
And if I want to start, one thing I love about you is I know you barely sleep because the crypto markets never sleep. So if I wanted to be if I want to get across as much information as possible as what are you reading? What are you looking at? What sites are you subscribing to? Where do you get your information from?
That's a great question. Unfortunately, I don't have a good answer to that because it's all these different platforms, and I have to, move between Discord and Telegram and Twitter and email constantly, and I'm a mess. So, it's really interesting. Originally, a lot of the crypto discussion happened on Reddit, especially Bitcoin. Our Bitcoin Talk originally. The Bitcoin Talk was started by Satoshi himself. It's still running. And that's where a lot of the ICO announcements happened in 2017 as well. But
I think I was going to say with the sort of token offerings, how many are you seeing? How many do you see coming through at the moment? Are they still being well supported, or is it a quiet market for them? What is the market environment for token offerings?
I think if you do something that is sort of what the market is looking for in crypto, there's a lot of interest. So it's possible for a good team to raise quite a lot of money if you have something that is what the market is looking for, which is currently DeFi. The pace is still much slower than it was in 17.
Thank God.
Yeah. Thank God. But it's interesting. So we moved from Bitcoin Talk to Reddit, and then we moved to Twitter and Telegram, and now Discord as well. So there's all these platforms where we look for information and follow the people we trust and listen to. And there's a lot of newsletters as well and podcasts.
Yeah. So So my next question is what are the areas that you're currently investing into, and what are the areas that you're looking at as potential investment opportunities for your fund?
So that's interesting. So a lot of people have said that now is the time to move away from layer ones, which means that they might believe that Ethereum is it and no one else can compete. So we like to think a little bit ahead of the market. And I think in 2017 we were saying that this ICO craze will die down, and we don't want to be too exposed. And I think that was the right decision. And then after that, we saw many funds saying, let's focus on the secondary market, which we have been doing all the time. So I think that's an interesting narrative, because in last month we invested in 2 new layer 1 projects, which we have been following for a long time, which has fantastic developers and support, and I think will come to the market very soon. So we actively invest across the spectrum. And
so you're doing venture investing as well as investing on sort of exchanges as well?
Yeah, so we do both primary and secondary markets, but mostly secondary. So 10% of our portfolio is in illiquid coins or new projects that haven't been launched yet. So that's kind of the primary investments, and then 90% is liquid assets that are trading.
Yep.
But apart from that, we still very much focus on DeFi, and we have seen the launch of new assets the last few months. Comp is a new asset that I mentioned. Balancer is another one that is launched as well recently. That is really interesting. So there are new assets coming to the market that looks really interesting.
Okay. And outside of DeFi, is there any other things that I should be looking at or should be thinking about if I wanted to sort of make additional investments?
There's still things happening on Bitcoin that people are probably not focused on. I think we will see technology upgrades to what is called soft forks to Bitcoin this year. Something called Schnorr signatures and Taproot, which will increase scalability and privacy on Bitcoin. I think that's really interesting. We will see new layer 1 protocols coming to the market like Polkadot and Avalanche this year. Definity will come to the market by the end of the year. Those are some really big things outside DeFi. Okay.
All right. Well, basically, that's all I have from a question standpoint. I was going to say, is there anything else? Is there anything else, or any sort of comments you'd like to make, sort of as a final statement? And I think I was going to say the question I always love to finish at the end, and crypto would be the hardest one to answer this in. 5 years from now, if you're thinking about everything you look at, thinking about all the conversations you have on a daily basis, everything you're reading, what does crypto look like 5 years from now? Because for a lot of people, they may have thought that crypto was dead at this point, when it's absolutely not in any way, shape, or form. So 5 years from now, where do you see crypto?
I think 5 years from now, we will have the Bitcoin ETF will be there. We will have many traditional investors that have an exposure to Bitcoin, and I think more and more people will see Bitcoin as an alternative to their holding in gold. And I think in 5 years from now, we talked about all the money printing taking place right now. At some point, we will see massive inflation in the world, I believe. And scarce assets will do well in that environment. Yep. I think that will play out. And apart from that, I think, what we're doing in DeFi, we're building a new financial infrastructure.
Yeah.
And I'm excited for that. What that will mean for the world. It will mean that, everyone that has access to internet will be able to access these financial services. So I'm super excited for that.
Brilliant. Well, Henrik, thank you so much for your time. Always enjoy chatting with you, and look forward to getting more updates.
Sounds good. Thanks.